Hey guys, it's been a while since we've done this, but we're answering questions live about home loans. So if you have questions about VA, FHA, what it takes to get a down payment assistance, what credit score do you need, whatever it may be, you have questions about buying a house, we're here to answer it. So regardless of what it is, do me a favor, load up that chat box with all the questions that you have about buying a house when it comes to the financing. We do home loans. We used to answer questions every single day on this feed. So if you have questions, go ahead and load them up in the chat box. We'll figure out the answer that you need. We'll send you on the right path. Load up that chat box with your questions. We will answer them. So anybody that has questions, thoughts, concerns about buying a house, just log it in right here. Just ask us the question. We will answer them. You will get on the right path. Our goal is to help people buy houses. That's our goal. If you have a question, ask it. We'll answer it. So it doesn't matter what it is. Doesn't matter if your question's about credit. Doesn't matter if your question's about how much money do you need, foreclosures, whatever it is, ask us your question. We will answer it here live. This is something we used to do on a regular basis. Connor, where you been, man? It's been a while since we've been on here. Connor always hopped on our lives, always supported us. Thank you, bud. Appreciate it. But tell them, Connor, tell them what we do here. If you have questions about buying a house, your first-time home buyer, ask a question. Load up that chat box. You want to buy your second home, load up that chat box. You want to buy an investment property, load up that chat box. So whatever it may be, load up that chat box. Let us know what your thoughts are. We used to do this on a regular basis. We used to have thousands and thousands. Connor, what's up, man? We used to have thousands and thousands of people coming in here asking us questions by large demand. We're trying to do it on a regular basis. You guys should know that Lee now lives in Texas. So I'm alone here in California. We're spreading our footprint across the nation. We also have a new member of the Chris and Lee team, Dylan. So there's a lot happening in our business, but our goal is to help you guys buy houses. Our goal is to answer your questions, get you on the right path, teach you the right things of home ownership, even if you're going to buy a year from now. Okay. Could be a year from now that you're thinking, I'm going to have a better job. I'm going to be in a better place. I'm going to be able to afford more things. Maybe I'm getting married. So cool. You guys are expanding. Yeah, we are. Yeah. Lee is in Austin, Texas. So our bank is licensed in all 50 states. So regardless of where you're at, we can help you get a house. We can help you buy a house. We can give you advice. We can send you down the right path. But as a company, we're expanding. So we're getting a bigger footprint in the nation. Like I said, Lee and Dylan are in Texas. I'm in California. Hopefully we'll get someone in Florida. Hopefully we'll get someone in New York. Hopefully we'll get someone in Washington. And we'll keep doing this and helping you guys buy houses. I mean, the truth is it's easier than most people think. On a regular basis, I qualify people that are like, I don't know if I can get a house. And chances are they're qualified. And it only takes a couple things done the right way in order to buy a house, guys. So the first thing you need, 2-year work history. If you have a 2-year work history, you can probably buy a house. Second thing you need is a decent credit score. What's a decent credit score? So the guideline says 580 or better for FHA. You can go even lower if you want to put bigger down payments. But for the minimum down payment of 3.5%, you need 580 or better. So you got 2-year work history, 580 or better credit score. Now, the next question is, how much can I afford? I don't know how much you can afford. We need to have a conversation. We need to talk about this. We need to figure out what you're making. Is it hourly? Do you get overtime? Do you get commission? Are you self-employed? None of that is difficult at all. We do all the work. All you guys do is inquire. So there's 2 ways to do this. Pre-qualification, which I recommend everyone do. Get pre-qualified. What does pre-qualified mean? It means we have a conversation. You let me know, here's what my income is. Here's how much I have saved. Here's what I think my credit score is. And based on that, I can give you a good idea of where you stand. Now, if you're serious, you get pre-approved. Getting pre-approved means you submit documents. It means you send me W-2s, paycheck stubs. We pull your credit. We do the math and we iron everything out. And from that, I can tell you what you are approved for. I can actually tell you what you're approved for. I can tell you, you can go buy a house for $300,000, $500,000, $2 million, whatever the number is. A lot of times people are actually qualified for more than they want because let's talk about Austin, Texas. Okay. Austin, Texas has a lot of inventory right now. Prices are pretty damn good in Austin, Texas. So, like for instance, in California, you get a 2,000 square foot house, 3 bedroom, 2 bath, maybe 3 bath, 3 bedroom, 3 bath, 2,000 square feet. That'll cost you about $800,000. You can get that same house in Texas for probably $350,000 to $400,000. Okay. So what that means is that dollar amount that you make in Texas, let's say you make $120,000 and that gets you that house. Okay. In Texas, you don't need that much money. You can make much less money. So it all depends on where you live. It all depends on where you're buying. It all depends on what your goals are. But getting pre-qualified really irons out a lot of those details and gets you on the right path. So load up that chat box with your questions, comments, concerns about buying a house. I don't care what it is. We're going to answer it as long as it's respectful and as long as we can, make it make sense. A lot of people ask questions that just don't make sense. Okay, that's just being honest. If you go to our feed, like us, follow us, whatever you do here, people ask really wild, crazy questions. A lot of times they don't make sense. And a lot of times these questions are really good and we end up shooting a video about it. Okay. People DM us with questions and we shoot a video about it. So if you guys want a video shot about your question, DM us, send us a message. But right here, right now, let's get you on the right path. Load up that chat box with your questions, comments, concerns about buying a house. I want to answer them. I'm not here for a long time. I'm only here for a good time. So please give me some questions to answer. But I gave you the basics of what it takes to buy a house. You need 2-year work history. You need a decent credit score, 580 or better, and a minimum down payment of 3.5%. But what if you don't have a down payment? What if you don't have 3.5%? Okay, let's talk about that. You want to buy a $400,000 house? That's $14,000. Who can say $14,000 in this environment, in this economy, as expensive as things are? I don't know where you're at, but where I'm at, gas is $6 a gallon. Sal, do you guys do DSCR? Yes, we do. Jonathan, be calling you soon. Hope to hear from you, Jonathan. Yeah, we do DSCR. I actually had a conversation with one of my real estate agents about that this morning because he wants to invest himself. So what's DSCR? Okay, it's debt service. So what that means is if your mortgage payment is $1,400 and your rent payment is $1,500, you basically qualify to get this loan. We don't need income documentation. You do need a good credit score. Okay, good credit score means 600 or better. It's different for everybody. The higher your credit score, the less money you get to put down. The lower your credit score, the more money you have to put down. So it's just makes sense for the investment. But DSCR means that you don't have to qualify with debt to income ratios. You do not have to qualify with debt to income ratios. Everyone's concerned about my car payment, my credit card payments, my student loans. DSCR, as long as you have the down payment and the credit score, all that goes out the window because it's just an investment property. Someone's going to pay rent as long as that rent payment services the mortgage payment. Okay, could be 100%, $1,500, it's servicing it. You could qualify. If it's more, you're probably going to qualify. The down payment is the biggest hurdle when it comes to DSCR. So anyone interested in getting a home loan, let me see if I can find the right one. Oh, this isn't the right one. I'm going to put up my phone number. You guys can screenshot it. And from there, you'll be able to reach out to us. I can't find it right now, but my phone number is in the bio, guys. Go to our profile. Our phone number is there. There's actually a link there where you can apply for a home loan too. You can just get the process started. But I always recommend calling us. Let's have a conversation about it. Let's make sure that we know all the good details that we need in order to get you guys on the right path. And sorry, I'm scrambling here because I'm looking for my phone number. It's around here somewhere. I like to share it with you guys. But load up that chat box, guys. Ask me questions. Ask me questions. If you want to know my phone number, ask me my phone number. I'll tell you right now so you can write it down. But the big deal is getting pre-qualified. Anybody interested in buying a house, I don't care if it's 1 month from now, 1 year from now, get pre-qualified because what happens, and I'll tell you, this happens all the time. I just dealt with one earlier this week where someone said, found the home of my dreams, want to get pre-qualified. It's listed for sale. It's been on the market for 1 day, which means it'll probably be gone by the time they're done getting approved. Okay. Even if I got them approved in the next hour. Okay. If that went on the market a day ago and it's in a hot market, it probably already has offers on it. Okay. If it's a slow market, if it's a slow paced town, then maybe you have time. But in most cases, you want to be ready. You don't want to find the home of your dreams and then lose it because you weren't ready. So like I said, whether you're trying to buy a house a month from now or a year from now, get pre-qualified. Let's just have a conversation. All you have to do is call me. It doesn't take a lot of investment, but a little bit of time. Okay. Now getting pre-approved takes a little bit more investment because you do have to complete an application. It's easy stuff though. What's your name? What's your address? David, I have owner finance right now and I'm paying 9% interest. Any refinance options? Yeah. As long as you qualify. Out the gate, your interest rate's going to be way lower. It's going to be at 7. Okay. That's probably a worst case scenario. I'm giving you a worst case scenario. It's 2% less than what you're paying right now, David. Now you have to meet the qualifications, which means credit score and income. As long as you have the credit and the income, you should be good. Now there's probably equity in the property. How much equity do you have, David? So if it's your primary residence, you could do FHA. You need 3.5% equity, which isn't a lot. Okay. I just gave you some math. If you have a $14,000 value on your home, I'm sorry, a $400,000 value on your home, you need 3.5% equity, which is $14,000. Do the math. 400,000 minus 14,000. What's the balance on that? 386,000. Okay. As long as your value is 386,000, I'm sorry, your loan amount is 386,000 or less, you qualify with the equity. Okay. Now the next step is, do you qualify with credit and income? Because we need to make sure you can afford that house. Okay. Now, realistically, you'll probably get closer to a 6% rate, somewhere in that range. David, 150 G's, that's what you owe. What's the house worth? What is it worth, David? Come on, tell us all. Tell us what that house is worth, man. You might even get some investors in here that are going to try to buy it from you and you can make some money. But anyway, name of the game is helping people get home loans. Name of the game is helping them buy houses. Name of the game is having them own a piece of America. Sports fan, do you handle refis? Yes, we do. We do purchases. We do refis. We do all the programs. You do FHA, VA, USDA, conventional. That's the price right now, 150 G's. All right, how much do you owe, David? How much do you owe on that house? We do all the programs. And we do non-traditional lending, non-qualified mortgages. It's called non-QM. Which means if you don't fit in the box of traditional lending, for instance, you're self-employed, okay, you make a lot of money, okay, say you make $250,000 a year, but after you do your taxes, because you have a great CPA, it only shows that you made $50,000 a year, okay, and how can you buy the house of your dreams if you only made 50 grand, but you really make 250? I got programs for that, okay. Now, because it is higher risk, because you're not necessarily filing your taxes the right way, okay, you do get a slightly higher interest rate, but it does mean the difference between you buying a house and not buying a house. So even if your interest rate is slightly higher, you could be a homeowner. 110 G's, that's enough equity, David. That's enough equity. So yes, I can get you a way better interest rate on that property with how much you owe versus how much the property is worth. So yeah, easy peasy. So we do refis, we do purchases, we do everything. I work for a national mortgage company, okay? National, which means we're all over the place, which also means I said the keywords mortgage company, not bank, okay? Because when you think of a bank, you think of like the big banks on the corner, right? Where they do checking, CDs, savings, all that other stuff that's involved in banking, okay? We don't do that. We're a mortgage company, so we do one thing and we do it fantastic, and that's home loans, okay? So our only niche is home loans. What time is it where you're at right now? It's 12:30 California time, 12:32. How can you apply, David? Great question. Did you and Lee break up? No, we did not break up. See, it says Chris and Lee. Why would I still be repping our brand if we broke up? But how can you apply? You can call me. Write this down, okay? Maybe you can flip your screen. This is backwards. My number is 909-841-3058. I'll give you a minute to grab a pen and paper, and I'll say it again. I'll say it in a second, though. No, we didn't break up. Lee actually moved to Texas. He lives in Texas. We still have our brand. We still have our company. We still have our partnership. We're actually growing. We took on another loan officer. His name is Dylan. He's kicking butt in Austin, Texas, too. So we're actually growing. We're not breaking up. We're growing. So that's the good news for us. But here's the phone number, guys. 909-841-3058. Give me a second. I'm actually going to look. Oh, there it is. Take a screenshot. I'll hold this up for a second, take a screenshot. Here's how you can apply. Call this number. Actually, what I recommend is text this number right now. And as soon as we're done with this live, I'll reach out to you and we will get you started on your home buying process. So rest of you guys, load up that chat box. Questions, comments, concerns about buying houses. I'm not here for a long time. I'm only here for a good time. And thank you for the hearts, guys. Let me see. We're at 1.5 in hearts, 1,500 hearts. Let's see if we can get to the 10,000. Guys, get those thumbs moving. See if you can get us to 10,000. Okay? I appreciate all of you for doing that. Did Lee get sick of the libs in California? I'm not going to tell you the answer to that. I'm not going to hop on that train. We're not going to talk about politics. But that's a joke. Here's the real answer. I'm not going to talk about politics. Did Lee get sick of the libs in California? And it's not just that, but it's the politics. Politics in California is a little different in Texas, a little different. Load up that chat box, guys. Load up that chat box with your questions about buying houses. I want to get everyone on the right path, even if you're not going to use us, guys. Even if you're not going to use us, if you are, screenshot this. But if you're not going to use us for a home loan, at least we can get you on the right path. Maybe you're thinking about buying in a year. I miss his weird shirts. I probably have one hanging around here somewhere. I do too. Let me see those shirts in the morning every day, making fun of him. He loves them though, and I love him for that. Come on, guys. Let's have fun. Ask questions about buying houses. Ask questions about your challenges. Let's get you on the right path. What I was saying is, even if you don't use us, you can at least implement the advice so you can get on the right path. Maybe you have a bank that you love. Maybe you're like, this is where my money gets deposited every month from my paycheck, and this is the only place I trust, and this is the only place I'm going to borrow money from. That's okay. This is America. This is America. You can do what you please when you please. It's a freedom here. You can choose. You can say bad things about our leadership and still live a great life. That's what's beautiful about this country. I love our country, guys. USA. You guys watching Euro World Cup? You see USA kicking butt in the World Cup? I don't watch much soccer, and I don't even know if we have a good team, but we won. I think we beat Paraguay. I watched them this weekend. We beat Paraguay. We might have played since then. I don't know. Like I said, I don't follow soccer. But let's get off the soccer talk. Let's talk about home loans. Load up this chat box, guys. Of the millions and millions of the Chris and Lee fans, where are you guys? I want to know what you guys' thoughts are about buying houses. Ask me my opinion on things. Is it a good time to buy a house? I heard we're going to have a crash. That's the same talk that's been happening since I've been in this business. I got my first license in 2006. Since then, everyone's been talking about a crash. Christy Turner, can you qualify for a home loan with a 520 credit score and collections? What is the lowest score? Okay, good question. Good question. Challenging file. Good question. Yes, you can get a home loan with a 520 credit score. Collections, depending on how new your collections reporting is, okay? Because I've done loans with low credit scores, like a 520, and collections, but as long as they're not, new stuff. Like, for instance, you had an American Express credit card, okay? And you hit hard times, had to stop paying that credit card, and it gave you 30-day lates, 60-day lates, 90-day lates. But those are from 2020, okay? A lot of us had hard times in 2020. I don't know if you know what happened back then, but a lot of us couldn't go to work. A lot of us had to be indoors, staying at home, wear a mask, all that silly stuff. And a lot of us had hard times financially. So in that case, that's collections, right? But now we're in 2026, so all that stuff's behind you, and you've had a job, making money, paying your bills on time, but your credit score has taken a hit, and it's at a 520. And the answer is yes. In that circumstance, as long as you've been paying everything current for the last 12 to 24 months, you can get a house. Now, it's going to be FHA, and you're going to need 10% or more down. Usually 10% is enough, but you will need 10% or more down. And if that's you, if that fits your wheelhouse, give us a call. I'll hold this up again so you guys can take a screenshot of it. Shoot me a text right now, and as soon as we're done, we'll have a conversation, okay? Now, I'll be honest with you. I get a lot of text messages, so I might get to you in an hour, but I'll get to you, okay? All right, got a lot more questions coming in. User 7387. I make 90K income, no debt. Would I qualify for 1.23 family, other 2 units rent out for 3,500? Yeah, I think so. I think you'd be darn close. You'd be darn close in that scenario. So this person's talking about buying a 3-unit, okay, a triplex, which means 2 of those units are rented, which means we can use that income towards qualifying. And then, of course, the $90,000 income, which is great income, is going to go towards qualifying as well. So it's like having 3 incomes on one house that happens to be $1.2 million. But still, that's a possible deal. Own a property, but want to buy another with the equity of the previous one. Angelica, very popular. So like I was saying earlier, it's very hard to save money for a down payment. Now, if you're a homeowner, you've done a great move financially, and that thing builds equity. Okay, that house, that condo, whatever you're living in, builds equity, and a lot of people access that equity to buy their next home, whether it's their new primary, an investment property, a second home, whatever it may be. It's a very common way to expand on your real estate holdings. So the answer is yes, that is possible. Angelica, user 7387 again, either 5% conventional or 3.5%. What was your previous question? On the 1.2 million. Either of those will work. Now, depending on your debt to income ratio, if it's low enough, 5% down, it's fine. 3.5% is fine. If your debt to income ratio is too tight, you might have to put more money down. But either of those is possible. Christy Turner, collections from 22 and 25. That's a challenge. I'd still give that file hell. I'd want to work it. I want to put my hands and my eyes on it. It is possible. So here's going to be some advice to you. Okay, you need compensating factors. Okay, compensating factors. There's 3 legs to a loan: credit, income, assets. Okay, one of those is challenged, which is your credit. So you better have strong income and or strong assets, meaning you're going to put a down payment. Okay, you're going to put, I don't know, 10% down. I think that was our conversation. But there better be some money left over in your bank account called reserves. Okay, reserves is money that you're not using for the transaction, but it's left in your account. So after the fact, when you get into your house, if any other challenges pop up, you have money to keep making that mortgage payment. Okay, compensating factors. Or maybe you make a lot of money. Maybe the house you're buying isn't, it's very low for the amount of money that you make, which means that your income is great, which means you have a low debt to income ratio, which is a compensating factor. So great credit is a compensating factor. Having a lot of assets is a compensating factor. Having great income is a compensating factor. Maybe you get a cosigner, which is a compensating factor. So a lot of those things can help. More questions. I'm loving it, guys. Keep them coming. Only other debt I have are 2 other investment properties where the mortgage pays itself. Okay, so how long have you had those properties, user 7387? And what's your name, by the way? I hate calling you user 8387. And put a real name there so we can address you. Depending on how you file your taxes. If you've had those properties for over a year, they're filed on your taxes. What great CPAs do is they find you ways to have deductions. And those deductions can eat into your income. They can eat into your rental income, your personal income, and reduce how much money you're really making. So having investment properties might hurt you depending on how your taxes are filed when you're buying a new property. They might also help you. So I recently did a home loan for a vet. He owned a home in Pennsylvania, rental property, and he was claiming all the money. When I saw those taxes, I was like, damn, dude, that is amazing. I don't know if he talked to a CPA and told him that this was his plan to buy a house, so file his taxes properly, but he did, and he's getting the home of his dreams here in California. Latoya, can you talk about underwriting process? Not very much to talk about when it comes to underwriting, Latoya. So here's how it works. I'm a loan officer, okay? And I know the guidelines, and I know what works and what doesn't work because I put these things on thousands of files over the years, okay? And I've had my share of turn downs, okay? I've had my share where the underwriter says, can't do that, can't do that, can't do that. So a lot of things you can't see straightforward. You got to peel the curtains back and look around the corner to see what's going on with files. So today, once I put these hands on the file and an underwriter goes through it, they say, of course this file is going to be approved. Of course I'm going to let you borrow $500,000, $1 million, 200, whatever the number you're asking for, because Chris and Lee put their hands on this file and they know what they're doing. But what underwriters do is they just follow the guidelines, okay? They literally pull out their big sheet of guidelines for this type of buyer getting this type of loans, and they make sure everything makes sense. Okay, income calculated correctly, check. Property meets the guidelines, check. Credit meets the guidelines, check. Assets meet the guidelines, check. Reserves meet the guidelines, check. Self-employed income calculated correctly, check. So they just go through a checklist. Once they hit something that doesn't make sense, that's where they come back to us and say, what's this about? Okay. And that's what they do. They come back to us and say, hey, I don't quite understand this. Can you explain it to me? And I go, of course I can explain it to you. This person, LaTanya, does this and did that. And here's how she does this and here's how she does that. So yeah, approve it. And they go, okay, approved. And you get your house. Okay. So when it comes to the underwriting process, all they're doing is going through the guidelines. Okay. That's all they're doing and making sure it makes sense for the loan. Sam, yes, we lend in Texas. Like I was just saying, my business partner, Lee Duran, is currently in Texas. He lives in Texas. That's the Chris and Lee team. So yes, we do all 50 states, by the way. LaTanya, it's my pleasure. You're welcome. Mikey, think rates will ever get sub 5% in time? In time. I think it's coming. It may be in the next 12 to 24 months, but it's coming. I believe it's coming. There's a lot going on right now with interest rates. Okay. There's a lot been going on with interest rates for the past 4 years, guys. We've been in this environment for 4 years. This is not new. Okay. 4 years. If something was happening for 4 years, do you expect it to change? Probably not. Do you expect it to change overnight? Probably not. If your husband's been cheating on you for 4 years, you think he's going to stop cheating on you tomorrow? Probably not. If you went to therapy and got some help and figured out the problems, could it happen? Sure, but it's going to take some time. And that's kind of the same thing when it comes to interest rates. It's going to take time, okay? Today, the new Fed chair held rates, held them, okay? We've all been hearing our administration saying that the new guy is going to come in and change things and we need to lower rates. Our president is saying we need lower rates, okay? But depending on everything else that's going on is going to dictate where rates go, okay? After we get past the conflict that's going on in Iran, after we get past a lot of the conflicts that are helping here locally, after we get oil in line, after we figure out what's going to happen with where we're getting oil from, new refineries, blah, 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 all that stuff, and then we get to the finances of the country, it's going to take time, guys. It's going to take time. But is it going to be sub 5%? In my humble opinion, yes, but in time. And that's why we recommend getting into a home today, because depending on where you live, okay, there's these pocket communities like Austin, Texas. It's a pocket community. It doesn't represent the nation, okay? If you have a pocket communities, in some areas, values are going down. But as a nation, values are going up, okay? As a nation, taking all the data into account, home prices are still going up and rates have been up for 4 years. So if you wait, what do you think's happening with prices? They're going up. They're continuing to go up. Guys, we've been at 1,500 hearts for the last 15 minutes. So I need you to keep loading up those hearts for me so that I can get love, I guess. I don't know. Maybe it's for my, oh, shoot. I just got a message that I have a client here, guys, so I have to leave. But take a screenshot. If you want to have a conversation, let's talk. I'm going to hold this up for a couple more seconds, and then I got to go. But I'm going to try to do this more often. So, guys, stay tuned. Stay on your screens. Don't go to work. Don't care for your children. Leave them at school. You don't never know when I'm going to pop up on the screen and answer your mortgage questions. But if you want to talk one-on-one, exercise this. We can do that, okay? Have a great one, guys. Talk to you. Bye. Oh, man, I forgot to shut this thing down.